Thank you, Gilbert. So good to be here and join you and your group on the GCFF. I have spoken many times to your conference, and I've always enjoyed the activity. My speech today is called The Never Normal. Undoubtedly, we see with COVID that our daily lives are affected. Everything from working from home, this speech today. And the reality is that we just don't know how that COVID is going to affect our stock portfolios. A common question I've asked is, how should I protect myself? Another one is, how high will gold go? Well, I believe, and I will speak today, that gold is the financial vaccine against this COVID. Next slide, please. In the last 30 years, we have had bubbles and bubbles and bubbles. And this bubbles have been created by our central banks. They have created money. And if we can get to the next slide, we will see that we have had repeated bubbles. We had a bubble in gold in the 80s. We had a bubble in the tech market. And today we have had the biggest bubbles. And that's the FANG stocks, the high-tech stocks, the Apples of the world. But really what's been feeding these bubbles have been the central banks. I can recall in the 70s when the president tried to fight a war and at the same time introduce a great society. That resulted in the near hyperinflation. This go round, we escaped from the 2008 and 2009 financial crisis only because the central banks created a lot of money. And now with COVID, of course, we have seen more money being printed, and this has an impact. It has an impact on the stock market. And one of the main reasons is because when the central banks print money, they have brought interest rates down to near zero. They have bought bonds and in Japan, stocks, and they have fed this, created this illusion of prosperity. And the stock market, of course, if you have a choice between almost 1% on bonds and getting gains on the stock market, where would you go? Of course, you would go to the stock market. The next slide, please. And so we have seen that with COVID, and even before COVID, that the Americans have become the biggest spender in the world. Under Mr. Trump, he has spent more than all the presidents before him. And I thought President Obama was a big spender. But no, the Americans have been able to spend because foreigners and in fact their own institutions have been buying up their bonds, have been buying up their stocks, have been financing the American deficits. Next slide, please. Until we hit COVID. And when COVID hit, as I mentioned, it has transformed the entire world. And that is why we are going back to the never normal. We're not going to go back to the time when we traveled when we felt like it, or we went to a restaurant. This is change. This is our generation's Great Depression. And this is going to change the financial markets. COVID, as you know, there's been 210,000 deaths in the United States, 8 million cases in the US alone, 35 million cases worldwide. There's hope for a vaccine. I can recall that it took Merck 4 years to create the vaccine against mumps. And that was record time. It will take a long time before a vaccine is around the corner against COVID. The problem is that the world's richest country, the United States, with something like 4% of the population, has 25% of the deaths. the American failure has come at a cost, not only in lives, but also financially. And I will show you that gold is the beneficiary. The next slide, please. What happened was that when COVID hit, all the world banks got together and they printed money. They created, as in Canada, we had $350 billion worth of deficits created in handouts to landlords, to the man or the woman in the street. In the United States, it was a $3.2 trillion package. And in fact, the second package now, President Trump last night vetoed. But in creating these packages, the central banks, the theory was to create government, replace the revenues. And so it worked out that they created money almost of 15% of GDP, of the growth of the economy. In the United States, it was $3.2 trillion. That was 19% of their GDP. In essence, what the governments did is they nationalized their economies to replace the revenues, because under lockdown, businesses, factories, restaurants were not open, and they just handed out money. In other words, they froze the economy. They brought interest rates down to near zero. Next slide, please. And as a result, the Fed continued its quantitative easing. And so we see from this chart on how there was an explosion in money printing. And that is the problem, is that to fight COVID, it came at a financial cost. And we haven't seen the hangover yet. In the US, debt is at $27 trillion. Next slide, please. To the point where debt is now, their debt at $27 trillion is more than 100% of their GDP, of their economy. America has become the largest debtor in the world. They have a deficit, and if you include the Fed's balance sheet, of 33% of their GDP. A third of their economy is to create the illusion of prosperity, to get the economy going again. It costs a lot of money. Interest rates went down from 5% to 0.7%. Those are the lowest in 4,000 years. We have never had interest rates this low. These deficits, however, have to be financed. Next slide. As you see, government debt is financed by US investors, the banking industry, US institutions, and foreigners. Foreigners have financed about a third of the American deficit debt. And the problem with that is that while the US dollar is considered the reserve currency and the currency of choice, that after a while, those foreign holders have decided, partly because of the trade war, partly because of sanctions, partly because the Americans seem to be going their own way, that they aren't so happy now to buy US Treasury bills. So in fact, you have Russia unloading all their Treasury bills and buying gold. I believe that foreign holders, when they look at the US dollar and they realize how much money is being printed, that Americans are debasing their currency, that they are not going to want to finance the American debt. And when that happens, that puts more and more pressure on the Federal Reserve, which in essence has to print more money. This has all happened before. It happened in the 30s. It's happened in the 70s. Next slide, please. So what we see is that America has the largest debt. Japan is number 2. But the problem is that the world has to finance America's debt. And as I mentioned, they are not so anxious. Next slide, please. So when I mentioned that Americans spent $3.2 trillion, you say, what is $1 trillion? Well, I thought I'd show you today. This woman is sitting on a sofa beside a stack of about $100 million. The couch alone is worth $50 million. Next slide, please. That before you is $1 trillion, and that includes the White House, the jet, and you can just see at the bottom of your left-hand corner is the couch. That is $1 trillion. So when the Americans have $27 trillion of money, there's not enough room to fit that. Next slide, please. So America has had their problems before. And I mentioned earlier the Great Depression. Well, the Great Depression, we can remember, was the lines for coffee, for the unemployed. Today we have, similarly, we have lines, except they're in cars, for testing, for checks. We have food lines also. Next slide, please. And what happened during the stock market? Well, the stock market, as we all remember, was in the 30s, stocks collapsed. But we also had a rally. And then the 30s, stock prices collapsed about 90-odd%, and they regained 50%. This go around, stocks have almost gained what they lost. Next slide, please. The exception being in China. China, what happened in China was that GDP fell out of bed, but they now will have the first country to have positive growth, the only country to have positive growth this year. Next slide, please. Next slide. Why that's important is because during the Great Depression, then they did not have a big economy to take them out of the depression. Today, it is different. What I did was I looked at the Great Depression then and I looked at it now, and there are some similarities and differences. As I mentioned, stock prices did regain on the second leg before giving up all their gains. We have a similarity in tariffs. Then we had the Smoot-Hawley tariffs. That's when they put tariffs on 900 goods. And of course, what happened afterwards is that the export market collapsed by 50%. We had the Trump tariffs today, but that has not worked because US exports have collapsed and imports have increased. In fact, the current account deficit is the highest in 14 years. Then in the Great Depression, we had the Roaring 20s. Today, we have the FANG stocks, the Facebooks, the Apples, the Netflixes. And then we had the Hoover. He did not call it right. He said prosperity was around the corner. Of course, Mr. Trump, he called for a vaccine by the Easter resurrection. Gold, what happened during then was gold was fixed. But since then, gold went up 26%. It's given up some of those gains, but gold has been the refuge. And of course, debt to GDP. Then the US economy was only 50%. Today, it's 100% of GDP. Next slide, please. The financial antidote, the financial vaccine, I believe, is gold. This has been the performance of gold. Gold is going to be the protection against COVID and the impact on the economy. Gold is also going to be the protection against the decline in the US. what I call the decline in the end of the US exceptionalism. Gold did well during the Great Depression. In fact, while it was fixed, homestake traded. Homestake went up 474%. Dome mines 500% during that time. Gold has made record highs amid this, and it is the protection. Next slide, please. And it's not only retail, but central banks have decided that gold is a protection. As I mentioned, Russia dumped all their treasuries and bought gold. China, too, has been buying gold to the point where they have 1,936 tons of gold. Their increases, they've been buying gold every year, as well as Russia. Central banks have been buyers since 2008, and they continue to buy. Next slide, please. So my sense is that China is going to be the big player in this. America has the biggest debt in the world. China has the biggest credit in the world. They own something like $1.1 trillion of US treasuries. I believe that they are internationalizing the renminbi, and they have been big buyers. The US are the largest holders of gold at 8,000 tons. China, Russia has 2,100 tons. China now has 1,900 tons of gold. They are big holders. Next slide, please. China has been increasing their reserves 200% since 2003. They only had 600 tons during that time. In addition, we have seen the Shanghai Gold Exchange is the largest physical trader in the world, and they now own the largest vaults. So my belief is that China is looking ahead, and they see the decline in the US economy. They see the decline in the US dollar. They see the twin deficits of the Americas. They see Americans having problems with the elections. In fact, we don't know whether after the November election, who will be the president the next day. We have seen the decline in their healthcare. The world's richest economy cannot defeat. This is the economy that created the smallpox vaccine, polio vaccine, and now having trouble with COVID. COVID has outlasted their bailout packages. So I believe that the America is in decline, and so is their currency. And I believe others believe that. And so gold is the world's currency, and that is the reason for China buying. Next slide, please. You can see through that performance that China, that gold has done better than oil, better than even the Standard & Poor's 500, and even better than 10-year treasuries. Next slide, please. The dilemma, however, for China and for investors today is that it can take 10 years, 7 years to discover a mine, build a mine, finance a mine, and have it in production. There's just not enough gold mines around. China is the largest gold producer in the world, but is our largest consumer of gold. They are a net importer. Their gold mines, however, have very short lives. Most of their gold mines are open pits, and thus they are run out of reserves. So that's why we see some of China's champions today, Shandong, Zijin, coming overseas and buying up gold mines. The dilemma, however, there's not enough gold mines to buy. There's only 400 or so gold mines in the world. 40% of those gold mines only produce 100,000 a year. 21 mines only produce 500,000 ounces, and there's only 6 mines in the world that produces 1 million ounces a year. There's not enough gold around. Now, next slide, please. That's the reason why it's cheaper to buy ounces in the marketplace than to explore. That's why gold miners have been buying each other. Kirkland Lake bought Detour Lake because it had a very short life. And so gold stocks are where to be. And the premium has been 20%, as high as 41% in Santa Barbara's case. So my belief, gold mines are the next big thing to own. I've done a calculation of the in situ, of the reserves in the ground and the market cap, and gold mines are still cheaper on a market cap per ounces in the ground. So therefore, I think not only the Chinese gold miners, but other gold miners will be buying them. Next slide, please. This is a calculation of the market cap for reserves in the ground, as well as reserves per $1,000 shares. And it just shows you how cheap the gold mines are. Next slide, please. So my belief is that, and I've been saying this for more than 6 years now, that gold will be at $2,200 an ounce. I believe that will this year. Now, the fundamentals are, industry fundamentals are attractive. I mentioned that Asian interest in gold is strong. There's no new supply. There's no new gold mines are coming. Reserve grade has been fallen from 4.6 to less than a gram per ton. There's not that many gold development plays. The gold stocks are very cheap relative to gold. Plus they have declining costs. I can recall when the average ounce for gold production was around $1,200 an ounce. Now it's below $1,000. And then as far as demand, you have the central banks buying gold. China does not own enough, only 2% of the reserves in comparison to the Americans, which own 78% of their reserves are backed by gold. 19 central banks bought the most gold in 50 years. And so I believe gold will go from the west to the east, and thus it is the best buy around. It is the best vaccine against COVID. So that's it for us. Next slide, please. Maison is a investment bank that we have been around for more than 50 years. And we give advice to institutions, governments, and corporations. And I'm always happy to talk about gold. And thank you, Xie.
Thank you, John. And I have a few questions from the live audience. Maybe you can help answer. This one is for Max, the very first one. What do you think of the modern monetary theory? Some people think that we can keep printing cash without any repercussions. So what's your thoughts on that one?
The modern MMT, as they call it, is like giving my daughter a credit card and telling her you go ahead and spend it. At some point in time, if she bought a Ferrari and a house and everything else, somebody has to pay. And modern theory is that they will grow the economy. Everybody will grow so rich that everybody will be rich enough to repay all the debt. It's never worked in the past. They tried this before. You had hyperinflation. We almost had hyperinflation in the 70s. We had hyperinflation in the Weimar Republic in the 30s. It doesn't work.
Okay, so maybe so the follow-up the question from audience Edward. So do you see a massive inflation as a result of this cash printing? So now, what the world is doing now because of the COVID-19?
I think that down the road, not near term, there will be a massive inflation. And the reality is that the US dollar is so overvalued. If the US dollar falls 20 to 30%, as I expect, and others have said that would be a big boost in domestic inflation in the United States, because they are big importers. and the price, the decline in their dollar will result in higher inflation. Then you would have a pickup in what they call wage inflation, supplies and that. So yes, I see a return to inflation, and that will also mean higher interest rates, but not near term.
And another question from Will. So where do you see the commodities market going if Biden wins, or how about if Trump wins the election?
Both candidates are the biggest spenders. No one is concerned about paying debt. No one is concerned about deficits. And so the reality is that the Americans have a problem with their deficits, and thus commodities in general are hard assets. Copper is used, as we see in the new world of electronic vehicles, EV. Copper is going to be something big. The only commodity I see near term that will not do well is oil. They're just, as the economy is not growing, we have a surplus of oil. Other commodities look very interesting.
Okay, one last question from a Chinese feed here from Austin. He is asking, what are the two key questions that you ask the CEOs of the mining companies when you examine their companies for investment?
One of the common problems for the CEOs, and they tell me, is that they are concerned about reserve life. And the problem is that they are only this year now spending more money on exploration. They're talking about organic growth. That is, they're looking around where their gold mines are, and they're looking for near-term places to take advantage of the facilities. That means that last year they could not replace their reserves. And this year, I don't expect them to replace their reserves. So reserves are declining, whereas demand is going up. So that means that the gold stocks are who have discovered or sitting on gold mines are the best place to be.
Okay, thank you for your insights today, John.